One thing that I want a little bit more clarity on is the owner's salary. So how does paying yourself less or more impact the valuation of the business? And as you get closer, does it make more sense to pay yourself more to show higher owner salary, or do you kind of want to like pay yourself a little bit less, or like find market average and just stick around there? Like, what's the pros and cons of doing either one?
So if you pay yourself less, they're gonna go in and be like, "Look, this is not what a CEO should be paid in this." So they're gonna increase it. But no matter what, it's going to be an add back, right? If you're paying yourself less to make the business look better, they're gonna look at that and say, "Well, the business isn't doing as good as it is because you're not paying
Yeah.
yourself." But
Yeah.
but realistically, it depends on how you're set up S corp or LLC too. So if you take it as a personal, right, you should pay less taxes on it than business tax. So that's one way to do it. But I see a lot of owners that pay themselves less and just write everything off in the company, but they're not tracking that. So you're really not paying yourself, because if you didn't track it correctly, you can't add it back when you sell. So that's the real big difference. So if I paid myself
Mm,
$60,000 a year, but I wrote off 200,000 in the business and I didn't track it, they're not going to give me credit for that. If I pay myself 260,000 a year, I will actually get that back. They say, "Oh yeah, that's a proper range for a CEO of a company this size.
yeah.
We can add that back."
Gotcha. So the higher owner salary can actually be looked at as like a health signal of the business overall. If
Correct.
they can afford to pay the CEO this, like, you know, there's less room for fudging there than if we just pay less and then write off a bunch of stuff. Now we have to get into the weeds and really prove and have receipts for all that. That makes sense.